please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and good morning and welcome to Power Breakfast in the Mumbai News Centre. I am Anisha Jain and with me is Mangalam Malu. Well, Mangalam, good morning. The markets is pretty much on a festive mood. We are scaling new heights every day, but today the market cues are a bit subdued. US closed a bit in the red. The Asian markets were mixed in early trade, and crude is a bit of niggling worry.
It is, but you know, Anisha, it's the last couple of trading sessions this year itself. And what was interesting is the mid-cap outperformance. Yes. And that is primarily because the FIIs, they're on leave. Yesterday, they did sell about 44 crores on a net basis, but gross volumes of what, 2,000 crores. That's half of what the domestic institutional investors did. And the conventional wisdom is DIIs play in the mid-caps while the FIIs play in the large caps. So let's see whether that trend continues or not. But as you said, a lot of cues to work with today. Take the show forward. Let's take a look at how the Asian markets are panning out. Remember, the Wall Street gave in a weak handover. Apple shares were down about 2.5% as they cut the guidance for iPhone X sales. So as a result of that, we're seeing some sort of weakish opening in the Asian markets. By and large, mixed. The Nikkei unchanged as we speak. If you take a look at the Korean markets, they're actually trading with the most amount of declines, underperforming the Asian peers. The Korean index down about 0.4%, and that's primarily because Hyundai Motors, that big heavyweight, is weighing down on that index. But no real cues coming in from both states as well as the Taiwanese indices, both of them up about 1/4 to about 1/5% in today's trading session. The rally in oil and metal prices led support to all the Asian indices, but if you take a look at the SGX Nifty, yesterday we closed at record highs, just 20 points shy of that 10,550 mark, and as we speak indicates an open with a 10-point uptick.
Okay, Mangalam, so that's how the scene looks as far as the Asian market is concerned. But in the US markets, all major indices ended in the red as shares of Apple tumbled, offsetting gains in energy stocks. Now, Apple shares closed 2.5% lower following a report that the company will cut its sales forecast for the latest iPhone X by 40% in the quarter to 30 million units. The Dow closed just flat up 0.03% lower. S&P was down around 0.1% at close, while the Nasdaq was the worst performer, closing 0.3% lower. Well, on that note, here is some expert opinion on the road ahead for the global markets.
I think there's no reason to expect that just because we happen to pass into a new year on the 1st of January that things are going to change dramatically. Our outlook is still pretty positive. We're still expecting to see relatively rapid rates of earnings growth, particularly relative to the US and to a lesser extent to continental Europe. So valuations in our view still look reasonably attractive, led by Japan. And I think that we're still seeing fairly steady rates of both export and domestic demand growth. I also feel that possibly in the second half, one of the things that could become more of an issue will be concerns about relatively faster rate of inflation growth. That's not priced into markets at the moment. First of all will be the marginal effect of higher energy prices, but most particularly I think it's going to be a more rapid rate of wage growth, which has been pretty nominal for pretty much the last decade. But with employment levels so high and therefore unemployment levels so low, expectations must be that that will start to rise.
All right, in the currency space then, the dollar holds steady against a basket of major currencies while it is trading flat against the Japanese yen.
In the world of commodities, crude oil prices surged to 2.5-year highs, boosted by news of an explosion on the Libyan crude pipeline, as well as voluntary OPEC-led supply cuts.
From the precious metal space, gold prices hold on to overnight gains after rising to more than 3-week high amid a softer dollar. Back home on Dalal Street, most of the day we were absolutely flat on the frontline index, but the last hour and the pop took place. Reliance, that stock surged and led the Nifty to end with gains of about 0.4% for the first time, hit the 10,550 mark. The Sensex too hit the 34,000 mark, managed to hold on to that level as a close, and the Nifty closed about the 10,500 mark for the first time ever. The mid-caps, they outperformed the index, gaining about almost 1%. Now Naveen joins us to tell us all the cues that are lined up in today's trading session, the last market setup of 2017. Naveen.
Good morning, Mangalam. Yeah, as you clearly pointed out, this is the last week of 2017. But on the very first day of the trading session, the party had begun, and the most active party animals were RIL, as you pointed out, as well as the mid-caps, which led the Nifty to record highs above the 10,500 mark. But remember one thing, the volumes, they were really low. On the other hand, in terms of the institutional activity also, FIIs, they have not been that active. As you know, that what happens with the last few days of the year, and that is what happened. FIIs net sold almost 44 crores in the cash market. On the futures market also, they sold close to 170 crores. But on the other hand, the DIIs, they pumped in a whopping 550 crore in the cash market. So that came in as a breather, and maybe that was one reason why we saw the Nifty moving above the 10,500 mark. Talking about the levels now, remember now the clear supports comes at around the 10,475 levels. The 10,500, 10,475, that comes in as a base. Why? Because one clear point is that the 10,500 put, that has added close to 9 lakh shares with a premium of around 25 rupees. So that is the base. On the other hand, you will see some resistance closer to the 10,575, 10,580 mark. Remember the 10,550 call, that has also added close to 4.5 lakh shares, but that is a tad bit of a resistance that we will be seeing. On the other hand, keep an eye on the mid-caps. They seem to be a little vulnerable given the FNO ban stocks. There are close to 11 stocks which are under the FNO ban. Also the PCR ratio, that has been on the higher side relatively, close to 1.6 times. In terms of global cues also, remember most of the markets were shut yesterday, the European markets, but Dow, they ended close to flat. The SGX Nifty, the Indian, they are also indicating a flattish opening for the Indian bosses today. Back to you.
Okay, Naveen, thank you so much for that. So yes, the parties in the mid-cap space up around 0.8% after the 4% up move that we saw last week. But in that context, what are the stocks that we should watch out for today?
Oh, quite a few in this lackluster market also, I would say. If you see DLF, the board will be meeting on 27th of December, wherein the promoters are looking to pump in money via the allotment of CCDs or warrants. On the other hand, JSPL, the capex over there, that seems to be completed. Remember, the total capex amount was close to 33,000 crore. Finally, the company has set up a 3 lakh million tons steel making oxygen furnace. On the other hand, Pratap Snacks, also a kind of a brand extension for the company, has launched a Rich Feast, which is another umbrella brand for the company. On the other hand, Prestige Estates, there is some intergroup transfer or acquisition, I would say. Remember, they acquired close to 66% in one of their group companies for close to 350 crores. Canara Bank also, remember, they came out with a fundraising lately, but again, we understand that they will be raising additional capital via a QIP. Last but not the least, Tata Steel, the big boy, is expected to see close to $5.1 billion worth of refinancing of their debt to reduce the interest costs. Back to you.
All right, Naveen, thanks a lot for that, but we can't keep our eyes off the screen. The Sensex, the grand old index, yesterday crossed the 34,000 mark. This has been a phenomenal year, recaptured the 30,000 mark, then 31, 32, 33 and 34 as we speak, just as the year ended. So CNBC TV18's Yash Jain caught up with the MD and CEO of the Bombay Stock Exchange, Ashish Kumar Chauhan, and he says that if the current pace of reforms continue, then India is likely to see better days going ahead. That's not all. Chauhan also believes that things will only get better in 2018.
2017 till now has given more than 25% returns year on year, and that's a pretty healthy returns. I think if you look back last 35, 40 years, this is one of the highest returns giving year in some sense. A lot of reforms have taken place over last so many years, last almost 2-3 years, and that's where we believe that going forward, if this pace continues, India is going to see good days going forward.
How does the IPO pipeline look as we move into 2018? Could 2018 be another record year as far as IPOs are concerned?
Usually, we keep on discussing only the IPOs for the equities, but that also has been phenomenal this year, and last year also it was very large. So effectively, we think India has the potential to collect that kind of funds from its investors over the next 10 years, the 2.5 trillion only from within its own savings. And that's where we think going forward, more and more retail investors are going to use mutual funds or other methods to come into the markets, and not only equities, but debt market also is going to see better days.
Well, GST revenue collections continue to slip for the second straight month. Now, data from the Finance Ministry released yesterday shows that the total GST collections for November collected till December 25th slipped further to 80,808 crore rupees, down from 83,000 crore rupees in October. Of the total mop-up in November, 13,089 crore rupees has been collected as central GST, 18,650 crore as state GST, and some 41,270 crore rupees has been collected as integrated GST. Now, 7,798 crore rupees was collected as compensation cess as well. Now, further, a total 24,836 crore rupees has been transferred from IGST to CGST and SGST account by way of settlement. Collections for November have been lower on account of rate rationalization that came into effect from the 15th of November. Remember, the GST Council had in its 23rd October meeting slashed GST rates on over 200 items, including a cut in GST rate from 28% to 18% for 178 items. Now, the next meeting of the GST Council has been scheduled for the 18th of January 2018. Well, we spoke to Hasib Drabu and Morvin Godino. Let's listen in.
I think there are a lot more people who do genuinely believe that the RCM has to be brought back, because that's one of the most important parts of the GST architecture, and we can't let it go like this. At no stage did the Council decide to do away with it. I think we only deferred it till March, but now we are certain that we need to get it back within that range, so perhaps even earlier. And this will become an agenda item for the next GST meeting in January. We need to push the accelerator on getting back the e-way bill and RCM. I think that is the key. I don't think, the collection and the rates have a direct correlation. Yes, our first burst of rate reduction was because the revenues are more than expected, but I don't think this would go on for very long. It is a process that would follow over the next 6 months.
There is bound to be some sort of evasion, which also we hope to correct with the e-way bill. It has been under discussion. Various reports have been awaited. Then we have been assessing every angle to that. And we have worked out a roadmap from the 16th of January. And after that, we will be actually going into that. So e-way bill also will help us to a large extent for the leakages, for plugging the leakages that are taking place. Normally, the officers' meeting takes place a couple of days before the GST Council meeting. This time, it has deliberately taking place more than 8 days before, because there's a lot of homework to be done, as well as wherever it is going to necessitate the change in the law, where we will have to go to Parliament. All those things also are being factored in. That's why there is a gap of, say, 11th and 19th. I think when GST itself was rolled, and as rightly said by our Prime Minister in different forums, good and simple tax, if you look at that, I think ultimately there should be good rationalization. So there should be 1 or 2 or 3 rate structure. That is what it calls for.
Quick handle on the Asian markets, not too much in terms of change as far as the frontline indices out there are concerned. The Nikkei, that one was trading with a gain of 0.08%, and right now it's trading with a gain of 0.04%. No changes there. Hang Seng and Shanghai, they've opened. Remember, Hang Seng was shut in yesterday's trading session on account of the holiday, opened with a mild green tick, 0.13. Shanghai again absolutely flat. But the index that is running is the Taiwanese index. When we opened the show, was sitting with a gain of about 0.2%, and as we speak is at the high point of the day with a gain of about 0.5%. Korean markets again dragged lower by Hyundai Motors. What is interesting is the SGX Nifty indicated a flat start with an uptake of close to about 5 to 10 points in the green, but as we speak that has turned into the red with a 3-point downtake. Not much in terms of gains, but still again oscillating between both the red as well as the green. Let's see what happens. But the big stock that moved yesterday, that one was Reliance Communications, up about 32% as we speak. In fact, in yesterday's session, that's because Anil Ambani has managed to rescue his Reliance Communications from the strategic debt restructuring process and retain control of his company. and that with a plan to reduce the company's debt drastically to 6,000 crore rupees from about 39-40,000 crores. What's more, Ambani says he has managed to do this without the company's lenders having to take any write-off. Well, here's what the new plan entails and what changes one can expect at Reliance Communications.
The resolution involves Reliance Communications exiting from the strategic debt restructuring framework. Zero write-off to all lenders.
That's a visibly relieved and confident Anil Ambani announcing that he will not lose control of his telecom business because of debt woes. As part of the package that has been worked out with lenders, Arcom aims to reduce its debt burden that had risen to around 45,000 crore rupees to just 6,000 crore rupees. With this plan, the full details of which are still to be unveiled, Reliance Communications has also avoided the insolvency proceedings initiated against it by China Development Bank and operational creditors including Ericsson and Manipal Technologies.
So the asset monetization process involved 5 modules, which is all related to wireless. The spectrum portfolio of 850, 900, 1800 and 2100. The tower portfolio of over 40,000 towers across India. The fiber portfolio, both intercircle and intracircle, one of the largest fiber assets that anybody has in India. The mobile switching nodes, which is over 5 million square feet of space across India, and real estate, which has nothing to do with the Dhirubhai Ambani Knowledge City. Hopefully, we will have a selected strategic partner come in Reliance Communication to further reduce the overall debt.
In addition to this asset monetization, Anil Ambani pegs the valuation of the development potential of 125 acres at DAKC at 25,000 crore rupees.
Once all this is done and dusted, a new Reliance Communications will emerge, which will have an asset-light B2B model and get 50% of its revenues from overseas. Now, it will focus on 5 key areas, which includes undersea cable business, 4G spectrum sharing alliance in Geo. In addition, it will boost of a data center in India and an international long-distance business, as well as an enterprise business in the country. But the debt reduction drive doesn't really end over here. Once the asset monetization drive is completed, Reliance Communications says that it will sell a minority stake to global players that have already expressed interest in acquiring stake in the new Arcom.
Now, CNBC TV18 had reported that various players like Idea, Airtel, Jio and Vodafone are looking to pick up Arcom spectrum. While Ambani did not name any one entity, he did clarify that the company had received over 75 expressions of interest and 15 non-binding offers. Also, he said definitive documents were in advanced stages of negotiation and that the financial closure for the plan should come in by March 2018.
Bidders are allowed to bid for various packages. And within that, bidders can bid for different, I'm just giving the example of spectrum, they can bid for different frequencies by circle. I think that the evaluation committee just runs through the process to saying what maximizes value, number one. 2, what brings certainty, because this is a cash deal. There is no financing, there is nothing. So what is certainty of execution and what maximizes value?
Remember, both Airtel and Vodafone confirmed to CNBC TV18 on 8th of November that they were interested in Arcom spectrum. Bharti Airtel had said, and I quote, "We have expressed our interest only in buying select spectrum and some equipments," end quote. While Vodafone said, "Our interest in Arcom is at a very preliminary and exploratory stage. Whether we will proceed further or not is uncertain at best." The debt repayment plan has received a thumbs up from the street, with the Arcom stock surging 32%. Some of the optimism comes from the fact that Arcom will not have to deal with the crisis in the wireless business in future. And some from the fact that the company has not declared bankruptcy. And so, there were words of hope.
I hope as a group and as Reliance Communication we never ever have to ever understand, appreciate, analyze or face an IBC, an NCLT, a SDR or any such process ever.
Bureau Report, CNBC TV18.
Okay, so that's the word coming in from Mr. Anil Ambani, the chairman of Reliance Communications, talking about the debt resolution plan. And remember, that entails no haircut for the banks as well.